Finance Minister Nirmala Sitharaman is chairing a two-day crucial GST Council meeting. This is after Prime Minister Narendra Modi's Independence Day call to give relief on GST to the common man. One of the key sectors that consumers are looking at is, of course, the auto sector. The small car segment is expected to experience a potential reduction. This will bring down the tax on small cars to about 18% as opposed to the 28%, which also includes additional cess. Now, lowering the GST on smaller cars to 18% will decrease their prices by up to 10%, improving their affordability. This might also encourage a larger number of individuals, particularly first-time buyers and middle-class households, to purchase cars. But then there's a proposal for 40% GST on high-end luxury cars apart from sin goods. Now, currently a GST of 28% plus a cess between 20 to 22% is applicable on cars over 1500cc engines, taking the total of 50%. But with the government minister's proposal, luxury cars could see a reduction of 10% with a flat 40% special GST. Now, this could give some relief, especially to buyers of high-end brand like Mercedes, BMW and Audi. This is what we will try and understand. What is the common man expecting? My colleague Mugdha sent us this report.
GST Council's meeting is underway and it is on everyone's mind related to auto sector, whether it be OEMs or buyers. So much so that I am at the launch of Maruti Suzuki's Victoris. It's a mid-size SUV, but the company has abstained from disclosing its prices, waiting for the GST Council meet to get over so that they can give a clear picture on prices. If you look at current pricing structure, there is 28% tax on all cars and bikes, but now that is supposed to change. Two-wheeler segment too will see a change in taxation structure. The commuter segment, the less than 350cc segment, is expected to be taxed at 18%, bringing in benefits from 5 to 15,000 rupees. Whereas the 350cc segment, the above 350cc segment, is expected to be taxed at 40%, a step that has seen some voices coming from the OEM, especially Royal Enfield and Bajaj Auto, have raised concerns that the investment in these larger size bikes might get impacted. However, the mood in the market right now is of wait and watch. Our dealer sources tell us that customers are right now not going to the dealership hoping for a drop in GST.
Arun Malhotra, former MD Nissan Motors, joining us now. He's also an auto industry expert. We also have Raj Kapoor, who's an auto expert. Thank you both of you for joining us on this broadcast. Mr. Malhotra, to you first. What is your expectation? Because there clearly seems to be a lot of interest in what is going to happen in the auto sector. Is there going to be some relief to people, first-time buyers, with respect to smaller cars? And what happens to the luxury cars? What is your expectation?
So clearly the report suggests that there is a big relief, and I think vehicles which are below 4 meters length, and it doesn't include only very small cars, slightly more expensive cars are also part of it, where the GST combined is between 20 to 31%, will go down to 18%. If it goes down, as your report says, the prices will come to 8 or 9% drop. Now there are 2 points to it. At the moment, the auto industry is passing through a big flux, and there is you can say, a demand slowdown. So there are consumer schemes available to the extent of 3 to 4% of the vehicle price. So effectively today, if the consumer offers are taken out, then the drop is 5%. But if the consumer offers stay with the festival season around the corner, it is going to be 10%. Another challenge which I see is sometimes we do have a GST cuts, and we had in the past excise duty cuts, but some cess is added to it. If that is added, it negates the entire value. Although the government says there will be no cess, but that is something which has to be seen. And the festival season is around the corner from 22nd September. So there is a lot of logistics, dispatches, funds, financing. So as early as possible, if it is announced and more than announced, it is implemented, the action can happen and the benefit can be made good by the customers in the festival season.
Right.
That's the way I look at it for the small cars.
Right.
For the luxury cars, it is slightly, or bigger cars, it is different.
Raj Kapoor, what is your sense, sir? Because like Mr. Malhotra was also pointing out, this is the festive season. A lot of people are, making rounds. It's, they're visiting all these high-end showrooms just to have a look at cars. Do you see a rise in consumption after some time? Are they waiting for the right time? And what is it in for the common person, common man and common woman, because there is also a sense that essentials could become cheaper. Do you see that happening?
Like Mr. Malhotra mentioned, this is a critical period. A lot of car purchases are done in this period or a month later. So clarity on what the taxation is should happen as soon as possible, because it essentially helps in making up the consumer's mind as to what he wants to buy and which brand he wants to buy and stuff like that. So this clarity should come as soon as possible. And reduction in rate is always a welcome move. It will definitely fuel some more demand. But like again, what Mr. Malhotra said, that if there is a rider somewhere, it will dampen this mood. There shouldn't be any riders because we seem to have a very high taxation rate for the automobile sector, and it's the entire cost of ownership is very high. We are taxed when we buy the car. We are taxed. So when there is such a robust, tax revenue scheme for operational costs, like you're taxed on insurance, on fuel, on highways, so why should you want to, reduce the amount of people wanting to buy cars? So if you reduce tax on buying cars and more people buy cars, more cars on the road, then your operational revenue stream is so much better.
Right. Mr. Malhotra, what are the riders that you would not want, which would be not just bad for consumers, but also for markets? And also when it comes to the sticking point on EVs, what is it that you expect?
So EVs today are taxed at 5%, which is the lowest tax. So I don't think it cannot improve on that. That's a very lucrative tax. Only news which is there that cars which are more than 25 lakhs on EV probably will have a higher GST. They might go to 18%. But that's a conjecture which has to be seen. The second part which happens is, over and above the GST, there is a concept of road tax restriction which comes under the state government. 12 years back, when there was an excise cut, generally what happens, the states increase the road tax. And the road tax, which was to be 8% average in the country about 10 years back, has gone up to 12%. Now, the government has to see it should not happen that from one pocket you give to the customer. And the states, because they also are always starved of cash, they increase the road tax or restriction, which is just a way of getting money in it that goes up. So whether it is cess, whether it is road tax, cess is part of the central government, but road tax is part of the state government. It should not happen that the price goes down and road tax is increased. And probably the third thing is companies give generally lucrative offers in the festival scheme over and above the price. So if the price cut happens and the consumer offers all are withdrawn, then the effective increase or the effective benefit to the customer is more limited. So these are 2-3 riders which can happen. The first and second rider is more important. But obviously it will spur up demand. But I feel two-wheelers is where the most price elasticity is. Because entry-level two-wheeler prices have gone up by 50% in the last 2 years because of various emission norms, safety norms, various other norms which are there. So effectively, there is where the real benefit will arise, and the two-wheeler market is stagnant.
Right.
Passenger four-wheeler market still is going up. So
Right.
This is the scenario as it exists today.
Mr. Kapoor, how are brands reacting to this? Because like both of you mentioned, there needs to be more clarity, not just on the tax slabs, but also on the compensation cess. How are brands reacting to this? Is there a sense that many of them are looking at orders that have confirmed sales? How are they looking at stocking up inventory, especially at a time like this, which is also the time when more people look for discounts, more people look for buying things because this is the festival season?
Like I mentioned earlier, the timing is critical. This is the time when most dealers tend to increase inventory because they are gearing up for the festive season. And when something like this happens, then what happens is that the dealer doesn't want to pick it up because he's not sure. The customer is also sitting on the fence. And like Arun mentioned, if you delay this, then the logistics of this is going to hurt us because there's a certain time lapse that you need for the order to go, the car to come to the dealership, and then subsequently get sold. So whatever the final outcome, it should happen as quickly as possible, and clarity should be made available to all stakeholders, customers, sellers, manufacturers. everyone.
Malhotra, when do you expect the new rates to come into implementation? Because there's a process that needs to be followed. It's a consultative process. The meeting ends tomorrow, but then, of course, there'll be more mechanisms that will be put in place. When do you think is the best time for the slabs to be announced officially?
There's a wish list actually. One positive thing has happened when the Prime Minister announced on 15th. The GST meeting was planned somewhere on 15th of September, which has been preponed. Generally, between the GST meeting conclusion and the conclusion that happened today or tomorrow, it takes about 10 to 12 days to make it operational. Now, it's question the speed of the government has to be there. Effectively, if some decision is taken on 4th, ideally you should be able to implement it by 10th or 11th, then the benefit of the festival season comes in. Another problem which is there, and this is from the dealer perspective, they have a lot of stocks of 28%, which they have to sell at 18%, but they will be able to get the mod VAT benefit over 6-8 months. But the bigger challenge is where the vehicles are with cess. And this is about sale of cars. Cess is not mod VATable. So what happens to the stocks of the dealerships who have already paid cess? Because there's no way of compensating for cess. So effectively, I think the government should try to crack the date of 10th, 11th. It gives a good 10-12 days for manufacturers to tie up logistics, dispatches, come pre-delivery inspection, and the vehicle being ready for the customer to take on the auspicious day.
Right. Mr. Kapoor, what about cheaper vehicles other than cars? Because the proposed rate cuts could make cars and bikes also more affordable is what we understand, specifically for first-time buyers. What would this mean for the ones who are looking at buying not just cars but also maybe bikes or other vehicles?
The way I see it is that the effective reduction in cost for a bike which is anywhere between 80,000 to 100,000 is not going to be a huge amount, in terms of if you think that most of the bikes sold today are financed. So the differential in the EMI is going to be hardly a figure to be concerned about. But the flip side of trying to tax motorcycles more than 350cc is not a very positive outcome because, we are just about starting to make good motorcycles above 350cc. And a lot of R&D has been done, a lot of investment has been made, and we are making good products. I mean, we are making, world-class products now. So to tax those motorcycles is not a very progressive thought process. That's my opinion on it. We should actually lower so that the numbers go up.
Mr. Malhotra, would you like to say something on that?
I think what he said is right correctly because, today Make in India is the buzzword. We are still in Make in India for small entry-level motorcycles. We are still strong in the international markets of America, South America, Africa, Far East. But in 350cc or slightly bigger motorcycles, we're just getting into momentum. So if they're taxed and if they are considered as luxury or sin products or given cess, it will delay. So effectively, I think if you are giving a GST relief, we should give it across the board, unless it's a very expensive motorcycle of 2-3 lakh rupees. That's okay, different. But any motorcycle from 80,000 to 2 lakh or 1,80,000, they should get that.
Thank you, Mr. Kapoor, and thank you, Mr. Malhotra, for joining us. India's proposed GST 2.0 reform that's going to be unveiled after the 56th GST Council meeting is being seen as a transformative step. It could ease financial burden on common Indians, but at the heart of this is also a reform that's designed to make the taxation system simple, more affordable and more secure for common people, especially those who live in rural areas, middle-income households and small businesses. And this is exactly what the Prime Minister promised on Independence Day. We'll have to wait and see if the proposed rate cuts could actually bring relief to common man. With that, it's time for a short break. More news and updates on the other side.